Good afternoon, everyone. My name is Ram Dhamija. Welcome to my channel. Today is 18th of February, and today is the Sensex expiry. It was a fairly decent day, I would say. It was actually a good day after many days. There was uniform secular decay across all indices, and the MTM also looks fairly decent today because there was no wild movement and there was huge decay in terms of theta. So a good day after many rough days in the market. And what has also been happening is that the market has been correcting, and market has been correcting quite relentlessly. And it is not reflecting in the mainline indices, but it is reflecting in the small cap, mid caps, alpha, momentum names, where the correction is just not stopping. It is one way correction, and it is very, very painful for people who are holding less quality names. So I will take you through all what is exactly happening and what is the outlook going ahead. So first, let us start off with how the markets have been today and what has been the movement of the indices, Nifty, and I will take you through what is the outlook for smaller caps as well. So let us first start off with our Nifty. So this is the Nifty 3 minutes chart. As you can see over here, we opened somewhere around 23,000 actually, somewhere around this level, and straight there was a very big candle right at the start. But then we kind of stabilized after making this bottom. It was looking like today is going to be a very bad day, and the markets are going to break the previous lows. But that did not happen, and from there has been a recovery which has been very good. Now if you look at the chart on a daily basis, this is where it gets interesting. This is the line, the support line, which has been from where the Nifty has been bouncing back. This is 22,780. Now briefly, one day we fell below that because this is the 8th consecutive day fall that you're seeing. So we briefly fell below this line, but then we have been able to come up. So I would not really take it as a break. I would say that it has been probably the one, two, three, four, fifth time that this bottom has been tested. Now either this becomes a very, very strong support, or this support does not hold, and we fall right below this. As of now, the indications are looking we are very, very weak, because we are not even able to go to this particular line, this line that you are seeing of resistance. We should at least go till 23,200 odd, but we are not able to even go till there. And if we are not able to go till there, then we are looking at a 1,000-point drop once we break this level. Now to break this level, there is going to be some sort of global news that will be required. Without that, it will not just pierce through that. Alternatively, what we can also, there is one more scenario in which Nifty probably stays somewhere around this particular range, plus minus 200-300 points. But the small cap and mid caps, they continue to correct. So that is another scenario that can possibly pay out. Now let us look at where the indices are in terms of their fall from 52-week high. Now as we can see, Nifty is one of the strongest. It has just fallen 7.5%. Whereas if you look at Nifty, it's 12.68. So it's holding around that 13% mark from where, which is the maximum that we have seen in this particular leg of the fall. But now, as you can see, small caps have started to fall big time. So small cap has gone to 23%. And I had been saying this for many months now. Whenever Nifty corrects 10, 12, 15%, small cap will go 2x of that. So as you can see right now, it's already gone 2x, almost 2x fall has been there. Nifty next is almost again 2x of Nifty. So this is also showing that some things which are run up very fast are also now coming down equally fast. And then you see the momentum names and reality, alpha. Alpha is broken. Alpha is broken at minus 30%. So it's gone below 30% also. We have seen in the past that Nifty Alpha 50 goes to about 35 to 40% maximum. So let's see where it stops this time. It's already at minus 30. And typically these are not bad levels to enter, but this is where it is. Now let us come to how the open interest is looking. This is the open interest for Nifty. Now open interest is not all that bad as we speak. It is bearish, but it has recovered a bit. It was 0.55 something. It's gone to 0.8 now the last couple of days. So there have been some puts that are getting added, which is decent, but I would not call it bullish at all right now. This is probably someone is just being kind, and they are not stepping up the pressure on calls. So probably, it has come up from 0.5 to 0.8, but this is hardly anything if you ask me. I would not see any trend in this particular 0.8. Now coming to the straddle decay, this was the highlight for the day. So we opened somewhere around 290 odd for today in Nifty, and we straight away went to 236. So there's a clean decay of 50-60 points, and all of it got realized. And the similar situation was there in Sensex also. There was just some spike here and there, couple of spikes. Otherwise, the realization was full. So it was a very, very peaceful expiry for Sensex as well. And Sensex, it is following that particular pattern wherein two expiries will be absolutely brutal. One expiry will be comfortable with the full realization, and one expiry probably you'll have one side stop loss going. So it is coming to that. It's not that all four expiries are good, and so Sensex is behaving like that. But having said that, this month Sensex returns have been very good, at least for me. It has been the best performing index, and as I have told you that I have my positions diversified across various indices. So Sensex is one of them. Now let us come to the heat map, how the heat maps are looking. This is the Nifty 50 heat map. So we had some winners in NTPC, Power Grid, Wipro, Techem, all above 2%. Trent was down, IndusInd Bank was down. In terms of Nifty Next, this is how Nifty Next is stacked up. LTIM was plus 3.75, Naukri plus 3.13, DMAT 1.6, Zomato 2.3, BHEL 3.3, HL minus 3.3, Motherson plus 3. So it was a mixed bag. But coming to the indices, how the indices are faring, this is how the index chart is looking. I hope you are able to see this. Let me just see if I can make it slightly bigger. Yeah, now I think it should be visible. So this is how the indices are today. So you can see small cap is down minus 1.23%, and small cap has been continuously going down. FMCG was down, so was auto. VIX surprisingly has gone down. Maybe it is because of the market did not do too much today. Pharma is down, media is down, MNC is down. In the sectors that were up, IT is up. Not surprising because of the dollar. Energy is up, infrastructure is up, financial services are up, which have been, as I had shown you, which have been performing the best. Now this is the small cap chart, which I will like to take you through. What has happened in the small cap is, there was this rally which started from March 23, where it was the most unloved sector. And from March 23 at about 8,700, it made a top at about 18,400. So it actually went up 2.5 times from the lows. But from there has been a steep fall. And right now we are at 14,100. Now this is the same level that we had reached in almost December 23 to Jan 24. So we are back by almost a year plus of no returns, if you see, in small caps. And this is the nature of small caps. They go up and then they come down, and then they don't give you any returns for a very long time. And this has happened in history as well. If you see this peak that we had made in 17 for small caps, got only cleared in 21. So it's like 4 years of no returns if you invest in the peak. Similarly, the peak made in 21 got taken out in 23 only. So again, 1.5 years of no return. And then you can see the sharp up move. So if I won't be surprised, that people will have to wait for a couple of more years to see this 18,000 getting taken out on the small cap. So this is the nature of small caps. If you're investing in small caps, you should know how you are getting in, where you are getting in, what instruments you are getting in. And there is definitely no point trying to take up a small cap portfolio stock and then try to do something about it. I'll talk about this a little later in the video, how you can probably construct a portfolio, which I also do. Now, coming to the international cues are looking all fine. There is no problem over there. Dollar index is at 106, no problem. S&P futures are up, no problem. Brent oil is at 75, no problem. INR is below 87, no problem. Gold is at about 2,900, no problem. It's at all-time high. So there is no issue anywhere internationally. The issue is all internal. So that is a problem. Now, couple of points I would like to tell you. One is that gold is making an all-time high every day, and as I have said before, it should be part of your allocation. And I don't know what is happening in gold. Is there some sort of problem in Bank of England that physical deliveries are not happening? There's a 10-week lag of, I don't know, but the gold prices are not coming down. So it is indicating that there is some problem somewhere. Either there's too much demand for gold, or there is a shortage of gold. I don't know what the issue is, but as a retail participant, investor, all we can do is we can have exposure to gold, which I have, and that exposure has been going up, though I've not been buying gold at all, just because the gold prices have been going up. So, and this is in spite of the duty cut that came in, so which, because of which 10% gold prices went down. In spite of that, gold is such high. So maybe, we should consider that gold should be part of your portfolio. We don't know what is in store, and gold is a perfect hedge for currency. Gold is a perfect hedge for any geopolitical event, any run on any bank. Gold will still be there. The next thing that I would like to say is that there is a lot of news flow that is coming in, so we have to navigate through that news flow. Mostly it is international news flow, some sanctions, some tariffs, something or the other keeps on happening. So because of all that news flow, there's going to be a lot of volatility, a lot of movement. So we should know how to navigate that. That is going to be important. Now with today's expiry, Sensex expiry, and today's decay, the PNL is again looking very good for February. It's almost up 3%. I'm up 3% for the month now in February, and February has been good. My expectation was much higher, but last few days have not been that great. But today has kind of covered up for the last 4 5 days, and this is what happens when you are putting in trades every day. You get one good day, and it takes care of a lot of bad days behind. So going ahead, there is going to be pressure in the markets until unless we see a huge rally up move. The pressure is going to continue. The pressure is not stopping on small caps, on alpha momentum names. So if anyone is stuck over there, you should review your portfolio. I hope none of you have taken MTF and are stuck over there, because a lot of traders have taken MTF and are stuck, and there is very little that they can do. They'll have to cut their position. So never take MTF, in my opinion. If you ask me, if you don't have the money, don't punt on things which you don't understand. Build a solid portfolio for yourself so that you can generate wealth in the long term. And that brings me to my business as well. I help people construct mutual fund portfolios. So if you don't know how to construct a portfolio, please contact me. There is a Google form. Please fill it up. Please leave your details. I'll get back to you. So I help people in terms of analyzing their mutual fund portfolio and also constructing both the things free of cost. So if anyone is interested in making a solid portfolio for the next 5 years, 10 years, please do contact me, because this is a very good time when markets are down. You should start constructing portfolio in some form, in a systematic way, which will ensure that 5 years, 10 years down the line, if you do it through SIP and proper planning, you have a good enough corpus. So the links are there in the description. So that's it from me now. I did not make a video for a couple of days because there's not too much to say in any case. There's not too much happening in the market. So I will try to make a video as and when. I try to make it every day, but sometimes it's not possible. So that's it from me now. If you like my channel, please do subscribe to it. Please share it with your friends, because that is what motivates me to post another video and post my analysis. So that's it from me now. Take care. Have a nice day. I'll see you tomorrow.